Vacation rental DSCR. Hey, what's going on, everybody? It's Jeff Javarth and Jeff the Mortgage Pro. Thanks so much for watching my videos today. I really appreciate it. We're going to jump right in. We're going to talk about DSCR's loans for vacation rental properties. And these are also called short-term rentals. You probably heard of them that way. They're kind of referred to as both the same thing because they both mean the same thing. You're going to have somebody in there for a short amount of time. Usually that's somebody that's going to rent a property for days or weeks rather than like months to years going forward. That would be more of a medium or a long-term rental if you were going to do that. But short-term rentals, days to weeks are what we consider a short-term rental in our industry going forward. So short-term rental, again, another way to say it, vacation rental going forward. Let's look at some of the guidelines for these types of products. I think that this is a huge market in the United States. I love doing these DSCR loans. I've been doing a ton of them over the last couple of years, thanks to you, the viewers of my channel here, especially on the different types of videos that I've done about DSCRs. And so this one in particular is going to be, again, about short-term rental type guidelines here. So let's get into them first. So obviously this is for investment properties only. Okay, if you want to use it, your property for a second home, then that's totally fine. As long as you're going to be renting it out going forward with short-term rentals, you can still use this type of a short-term rental DSCR loan on this. And then this is for purchases, rate and term refinances, cash out refinances as well. And the different types of products that we have on short-term rentals, there's a bunch of them. So you can use a 30-year fixed, you could use a 5/1 ARM, you could use a 40-year interest-only loan. I really like this one because of cash flow purposes. And I also like this one too, a 5/1 ARM that's interest-only as well. Again, pretty awesome when you consider the cash flow potential of some of these short-term or vacation rental type properties going forward. Minimum loan amount on these, $100,000. If you're going to do a condo-tel, and you probably know what that is if you have one, that's $150,000 minimum on the condo-tels. So $100,000 minimum for any type of short-term vacation rental property and $150,000 minimum if you're going to do a condo-tel going forward. Maximum loan amounts, $2.5 million. Okay. And there's actually some investors that'll go up to $3 million. I don't see a ton of those going in my industry going forward. But however, if you do have one of those monster properties that is cash flowing like crazy because it's a short-term rental, maybe it's a luxury short-term rental, definitely up to $2.5 million. We can go even higher in some instances. And then with the condo-tels, we can go up to $1.5 million on the maximum loan amount there. The maximum cash out that you can take in most instances with most investors is $1 million. So if you're taking $1 million out and your property is still cash flowing, then you've got a pretty darn good investment property that you're working with, obviously, right? So you can use that cash for what you need to do. Maybe you're going to go buy another high-level vacation property. Maybe you're going to go buy a whole bunch of smaller vacation rental properties. Something to consider when you can get $1 million cash out on your DSCR loan. The cool thing is with DSCR loans that are unlike most other types of products is you can actually close in an entity. And a lot of times for most investors, it's kind of preferred that you close in an entity. And what do I mean by that? You can close in an LLC. That's pretty much the most popular one that I see when doing DSCR loans. You can close in an S corporation. You can close in a C corporation. All those different things are ways in which you can close on the property and hold title to that property. But just remember that with residential real estate, so anything from 1 to 4 units, when you're doing these short-term rental or vacation rental properties, you still have to personally guarantee the loan. So you're going to have to sign something that says, if something should happen, that I am responsible for paying back that mortgage, not the entity itself. So just know that with short-term rentals, when we're dealing with residential real estate, you're always going to have a personal guarantee on those types of transactions. Okay, so something to keep in mind when you're doing these types of loans. There's no limit to the number of properties you can own. In fact, I've seen people with 60 or 70 investment properties, and maybe they have financing on 10 of them. Typically, we want to see like a maximum of 20 or 30 of them financed, but there's investors out there that don't really care. So there really is no limit on the number of properties that you can own when you're doing the vacation rental DSCR product. Maximum typically is about 10 properties financed, up to about a $4 million obligation. But again, that's very, very uncommon. I don't see a lot of instances where there's people that have 10 financed properties that are vacation rentals and they have more than a $4 million obligation. But there's investors out there that will be able to do those types of loans for us. They just may be a little bit harder to find if we're working with that with your particular situation. Minimum FICO is going to be 660, but the loan to value is going to be reduced if you're at a 660 credit score. Typically, we like to see about 700 and above. And if you're above 720, 740, then you're going to get most of the optimal pricing going forward. The better your credit, obviously, the better your terms. Just like any mortgage that you would do out there, you're going to have better terms if you have better credit. So just keep that in mind. With short-term rental properties, minimum of 25% down. There's no 20% down. I don't see a lot of 20% down out there. They may exist, but for the most part, 25% down is what you're going to have to do if you're going to buy a vacation rental property with the DSCR. So make sure that you have that available. Reserves, if you're under 65%, you don't have to have 65% loan to value. That means that you don't have to have any reserves. That means 35% down payment on your vacation rental. Okay. So if that's you, then no reserves required for that particular scenario. However, if you're above 65% LTV, which is what most people are going to fall into, you're going to need a minimum of 6 months of reserves. So just a reminder what reserves means. Reserves is 1 month worth of principal, interest, taxes, and insurance. And you would multiply that by 6 for 6 months worth of reserves. Okay. So that whatever that number is. So if your monthly obligation is $5,000 for your short-term vacation rental with the principal, interest, tax, and insurance monthly payment, then 6 months reserves would be $30,000. Now that doesn't mean that you have to have that money liquid in cash in your checking account ready to go. And it's not money that you're putting into the transaction. You could have that money in 401ks, IRAs, stocks, bonds, anything that's somewhat liquid can be used as a reserve account. And it's not a number that you have to put into the transaction. It's just something that lenders use as risk calculations to make sure that you're a good, solid candidate for a loan. So keep that in mind when you're going to try to buy a vacation rental property. How do we determine the market rent on vacation rental properties? So some lenders will use what's called AirDNA to forecast the next 12 months or the previous 12 months of rental income from the note date, and they're going to look at least 6 properties within 2 miles. And they have to be above 65% occupancy on their vacation rental property. So that means that they can't be like a part-time vacation rental property because maybe the owners stay there, half the time, then they rent it out half the time. It has to be a majority. So 65% of the time, it has to be a vacation rental property on these types of things. And the market score for these is 60 or higher. So that's something you'll have to take a look at if you're going to buy a vacation rental property. And so for purchases, you can also use what's called a short-term rental survey. So maybe you're buying a property that is not currently a vacation rental right now. So how do you determine what the market rent is? Well, we do a short-term rental survey, also, vacation rental survey. It's another way that some people word it, but this is part of the appraisal process. Appraiser goes out there, they determine the value of the property, and then they're also going to look at, again, comparable sales within a small radius of that particular property, and they're going to figure out what the short-term rental income potential is of that property, and then that's the number that we're going to use for the DSCR, the debt service coverage ratio. So it's important that that number comes in good so that we're able to buy the property with our short-term rental DSCR property. Because remember, when we're using a DSCR loan, we're not looking at any personal income whatsoever. We're only looking at the cash flow of the property itself to be able to get a loan on this property. Okay. And then for refis, you want to look at the most 12 months worth of rental history and make sure that it's properly documented. So if you use a service like Airbnb or something, there's definitely accounting type stuff that they have for you that you can show us what your rental income is over the last 12 months. And that's the number we're going to use to be able to determine if we can do a DSCR loan on these vacation rentals for you, if that number makes sense. Okay. We want to have a DSCR of 1 or greater. So what does that mean? That means that the income of the property is greater than the expenses going out. And it doesn't have to be very much more. It could be $1 more to be able to have the DSCR of 1. Obviously, the higher the number of the DSCR, the more cash flow potential that property is going to be bringing in. what I often find when we're working with DSCR loans and we're doing short-term rentals is that these things cash flow way more than 1 on your DSCR ratio. They're going to cash flow hopefully upwards of 1.25, 1.5, even upwards of 2. I've seen upwards of 3 on the DSCR. That means they bring in 3 times as much income as the debt service that's going out on that particular property, which is phenomenal. That's a great investment that you have if you are in that range with your DSCR. And lastly, seasoning on ownership. There's no seasoning for the most part. That means that if you buy a property and you can have a DSCR loan on it right away, right? If you're going to fix it up a little bit, you can still get a cash out DSCR loan on it. If you're going to wait, some lenders want you to wait 180 days, but there are lenders that don't make you wait at all. And some lenders even make you wait 12 months. So it just depends on where you are and which lender we would want to take it to be able to do the different, vacation rental DSCR loans on this particular property. But hopefully that gives you a pretty good idea of how to finance a vacation rental property with a DSCR loan. If you fall into this category and you need some help doing this, I'd love to be the one that helps you out. And if you want, you can click on my calendar link down below, and that will help you schedule an appointment with me. I'll answer a couple questions. Let's talk about it. I'd love to chat with you. I'm chatting with a lot of people all across the country, just based on my different videos that I'm putting out here on YouTube. And hopefully you're one of the people that feels awesome enough to be able to reach out. I really enjoy speaking with everybody that's out there. So thanks so much for watching my show here. Hopefully you get a good knowledge of vacation rental DSCR product. And again, look forward to chatting with you next time. Have a great day. Bye.